Hello, everyone. Welcome back to the RationalInvestor.com's Daily Brief. Woohoo, party! Da-da-da-da-da-da-da-da-da-da. Woohoo! Holy moly. Quite a morning in the markets today, if I'm not mistaken. Interesting. We had, over in the crypto breadth land, we had crypto actually break a couple days ago in our breadth indicator. So I hopped out of my, I'm trading this crypto breadth signaling system. So I hopped out yesterday. Then I heard today somebody was dropping a bombshell. And actually, interesting enough, if I'm not mistaken, I think the press conference is like literally as we are speaking now. Although that's Snoop Dogg, he's not talking about crypto. I can guarantee you about that. Actually, he was relatively bullish. I think he liked the idea of the NFTs. Now, where did I put that news release about crypto? Well, oh yeah, here it is over here. Justice Department, oh boy, Justice Department to announce major international crypto enforcement action. Ay caramba. Well, I suppose, one of the hallmarks of an asset making it to the big time is now Big Brother wants their lump of share of the pie. So it will be interesting to see how this plays out. I mean, long and short of it here, pay your taxes. Don't do anything nefarious. Don't steal other people's money. I mean, gee whiz, why on earth are people doing this? If you just obey the law, there's still plenty of money to be made from trading. It's just, in our bankster controlled world, you're going to have to pay them their VIG, right? It's just that simple. So anyway, it'll be interesting to see what comes out of that. And as I said, as long as you're a law-abiding citizen and you pay the VIG, organized crime syndicates are not going to come after you. They might audit you, which is a pain in the butt, but if you haven't done anything illegal, you don't really have anything to worry about. So anyway, point here, though, I think you could make the argument that space was getting a little bit frothy. You started hearing people talking about just moonshots and stuff like that again. And we had one gentleman on Twitter we were kind of making fun of a little bit, but I don't know, he might be right. Kind of saying that he expected the market cap on crypto to get a $7 trillion or some crazy number like that. And it's like, well, okay, sure. Where are we now on total market cap? We're at 928 billion. So he's still got a 7x to go to hit his target. You never know, it might happen. Broader market, the crypto charts. There is that really nice trade there. And so I'm just sitting on the sidelines, just letting the dust settle here. Kind of looks like a rising wedge. And if that's the case, that usually needs to resolve bearishly, kind of like what we're seeing now. Wouldn't be surprised too, though, if these Justice Department comes out and says, we're not going to put crypto out of business, because I think way too much of the 1% is involved in the Bitcoin story now. There's no way that they're going to outlaw crypto, but I wouldn't be surprised if they drop the hammer on things like starting your own exchange up, and where you have your money and all that kind of stuff in the space, and of course report your taxes. Okay, so we started off the video. This is supposed to be about a half an hour rant here, sort of market summary. Obviously, crypto news fairly significant to this audience. But also too, we'll talk a little news, econs, also give you a little teaser. On the Afterparty show, we have our level 3 instructor coming on and talking a little bit to the community. Zach, our Hawaiian professional hula dancer, aka /surfer / real estate developer. I'm not quite sure how that works, but anyway. Zach, are you here today? Let's see if he's here. I don't know if he's here or not.
Yep, I'm here. How you doing, Brian?
Well, there's an excited statement. What time in the morning is it for you? Is
It's like
it
7. It's not too early. Why do
all
I
right?
sound
Were you insulted by
unenthused?
the real estate developer reference or the surfer reference or the
You know,
hula
I'm not
dancer
a very good dancer. And
okay.
I'm
It
also
was the
what we
hula
call
comment.
I'm also what they call a Halle boy, which means I'm a white boy. But no, so let me redo that. Aloha, everybody. Is that better?
There you go. Anyway, so we're gonna have a great conversation with Zach today. Actually, we had our TRI secret options formula meeting last night, and it was kind of funny. Zach was right into his presentation, and I just said, "Oh, just sit and I'll listen to Zach." And then, like 5 minutes later, to me, but I guess it was like 10, 15 minutes later, people are like, Brian, did you fall asleep? Did you fall asleep? So at least we get a second dose of Zach so I could catch up on what I missed last night. So I'm actually excited to hear what Zach has to say in his presentation today.
I'll try and make it less
Um,
boring for you.
no, it wasn't that boring. I mean, geez, it's when I'm working, I get up at like 4:30, 4:45 in the morning, and geez, just go the whole day. So anyway, okay, so market summary. As I said, I had a little bit of a shot across the bow with crypto this morning, and you can see that market's in a bit of a tizzy now. And actually, it's been fascinating to watch the stock market kind of puke out here today, along with commodities. And I think we had if we want to talk econ, sort of like why things are happening, I have a real mixed bag of data. Theoretically, the market would have liked the idea that producer prices are falling 0.5% here in December. The only issue here, though, is we're not. Yeah, I mean, you've heard me rant plenty about money supply. You know what the game is here. It's almost like cosmetic, the way that now they have to kind of flatten the rate of change to try and justify their existence. And frankly speaking, if these guys actually were like hired to do a job of maintain price stability, they should all be fired. I mean, they do absolutely horrible job. And in fact, I was watching a funny interview. My opposition leader in my government is going on right now about how the Bank of Canada themselves, these people, they make like 6-figure salaries, maybe 7-figure salaries, and they could not have gotten this more wrong than they did. Or maybe they got it exactly right, exactly the way they wanted to, but said they don't have any legal obligation. Nobody's going to hold their feet to the fire if they happen to let the system jack inflation up and all of our standards of living get screwed. Nobody holds them to the fire because it turns out that was their plan from the beginning. Jerks. Oh, well. Anyway, so point of the matter here, Econ's coming out. We are noticing, obviously, with the massive increase in interest rates, we're getting, I guess you could say they're getting control of the inflation problem, quote unquote. There is that rise in interest rates, and I wouldn't be surprised if I have to go a little bit higher. You notice. A guy like Druckenmiller, he pointed this out a while ago. Just even PPI data that came out today, I can see core PPI, all that kind of stuff, sitting 5.5. Market was looking for 5.9. So hey, way to go, even better than expectation. But Mr. Druckenmiller even said this move really won't end until you actually see this Fed funds rate above these inflation rates. Then you'll know that, okay, it looks like we've gotten this thing completely under control. I still think, to be perfectly honest with you, I still think that that we are stuck in the January barometer window here. And I still think that this year is going to be pretty darn challenging. Let's see, where the heck do I have that January barometer? It's around here somewhere. It's right by Snoop Dogg, if I'm not mistaken. January barometer. Here we are. So Specifically with regard to the stock market, I guess we'll work off of this. There was the first week, and I've talked to you guys about this in the public videos. Pretty wild price action. Also too, we're now the middle of the month. You notice this was about the middle of the week. So should we expect a pullback here? Maybe set the stage for some sort of big fall showdown in the stock market. And especially from what I understand, this would make perfect sense. U.S. Treasuries come out and said that that they'll do some tinkering and they'll buy the U.S. government another 6 months of time. I think that's what Granny said before we really hit the debt ceiling limit. So quite literally, the banksters saw that the newly elected Republican Party in the House of Representatives was serious about this. And keep in mind, just because they were recently elected, they're still pretty much in the spotlight of the voters. If they can score some sort of political win, as I said, Yellen's like, oh, mysteriously, we just so happen to find a bunch of billions here and there, so we're not going to hit the debt ceiling. Oh, how convenient, bankster crooks. But what they really want is they want, to get the U.S. government to endorse more debt, right? More hyperinflation. But they can't do it right now. So interestingly enough, in the face of that, it does make sense that the stock market probably come back off a bit. Probably also too, just even in the short term, that kind of rhetoric and stuff like that. Now, of course, little crypto bombshells being dropped and stuff like that. I could see that we set up for a pullback. Remember that we studied the S&P 500 options, and we saw that the heaviest open interest in the put options, basically where Wall Street has their neck in the noose. That's on the 390 strike on SPY. Notice also too, that's a nice 200 period moving average off this 2-hour chart. Is that an accident? Is it coincidence? I don't think so. Also too, I thought this was interesting coming out of the weekend. I was hunting shorts and I had a short idea. And now look at what they've gone and done. They went and ran the stops and basically a typical FU setup. And now we've put in a very well-defined double top. So before, not so much. And especially through the weekend, this was Asian session. These are actually now through US retail session. I even put a tweet out. Obviously nobody can read the market perfectly. All we can do is try our best, but I often suggest to people, although I can't find the darn chart, there we are. What are we supposed to think if we ever see the market smiling at us? So I got a funny feeling a pretty good looking top is in here. And also, and this is something you and the public can try and use. If you do have a very well-defined trading range like this, and it's an M, and this is a lower high, and then we make lower low, well, you can start applying things like chaos theory and Foggenbaums. And notice, I think this is interesting. Big old gap down here at that 390 level. Remember, we talked about that a second ago in the options. ATR, average true range, says that 391 is our extreme for today. Over the next day or two, keep in mind that options expiry is in 2 days. They usually say that the fireworks, the big business, is done the day before the options expiry. So believe it or not, I wouldn't even be surprised if tomorrow is actually the big firework. They bring it down, fill in the gap, get everybody all panicking. Then they just close it out on Friday, relatively quiet day right around that 390 level, or maybe even back up a bit. And my hunch here is that actually this is going to set up like almost kind of like a big head and shoulders that looks like that. And I'm going to be hunting like a dog, any kind of counter trend rally fail. I don't know where it's going to come, somewhere up in this area. And of course, think reload zones. So obviously we can start drawing RLZs if we want to anticipate it. And you can see, gee whiz, there's the reload zone. I just eyeballed this. Is this where the market bottoms? I don't know. But you can see reload zones right up against that original market structure. So going forward, thinking about shorting counter trend rallies, I think actually makes sense now. Econs, kind of waffly. We still have a problem with inflation. Anybody who tells you producer prices rising by 6% annual pace, this would make somebody 5 years ago puke out. But now, oh, actually, this is a really good report. Come on. Good to see, Mr. Druckenmiller. He originally pointed this out. And of course, you can probably hear that I'm a fan of Stanley. Um, he pointed out that basically this is the anecdotal evidence that this was all some sort of con job. I mean, there is no reason whatsoever why retail sales on an annual basis should go up like 50%. I mean, you want hyperinflation? That's exactly how you get it, you stupid idiot banksters. But of course, remember, this is all part of the plan. This should have never happened. And I remember Stanley going on public television, CNBC and those kind of things, not really public, but going on there and going, why are these people doing this to us? It makes no sense. Are they not Americans? And all that kind of stuff, So, the writing's on the wall. It's clearly obvious that somebody's really tinkering the Great Reset and all that crap, right? So, they are going to tout the fact that producer prices are softening here, but I don't think we're at the point where we can declare victory just yet. Interesting to see at the same time, of course, now that the Fed's gone and cranked interest rates up, are you going to find that the economy is going to roll over? Yeah, you might. And this is exactly the pain that Mr. What the hell's the guy's name? Chair Powell, right? Powell. This is the pain that he wants to see. And if anything, he probably wants to get this down here to try and break the back of this recent push in inflation. So, and actually Chris nailed it perfectly this morning. Do you remember what you said this morning? That was absolute perfect analogy to this market state. Do you remember what that was?
What's bad for Main Street is seemingly good for Wall Street.
Yeah. So actually now Wall Street's kind of going, well, if this is bad for Main Street, maybe it's bad for Wall Street too. It's interesting how, we're rolling over hard here. That was a wicked trap. In fact, what a great illustration of the trap. This is the SPY. This is the stock market's proxy. They gapped this thing higher this morning and then just puked it out. Talk about a trap. Holy moly. Okay, rant. Sure hope you all enjoyed that. So, be careful. Don't take no wooden nickels. You know how it goes. What time is it? How am I doing? First off, and always good to touch base with the boss. How are we doing on stuff that we need to talk about today? Is there anything on the list that I missed?
You're on a roll. We've actually talked about a little bit of crypto and what's happening in that realm, PPI and retail sales. Mentioned what's bad for Main Street being good for Wall Street. Not anymore, I guess. I don't know if you want to talk a little bit about the day trading that we had this morning, but that could also be something you want to mention, maybe.
Actually, we were. It's fascinating to watch Chris's take on the opening range trade, and then old Brian, his take on the opening range trade. I think out of the gate for us, we had sort of one winner, one loser with the gold and the crude, right? I think it was one win, one loss, if I'm not mistaken.
Correct, yeah.
In fact, actually, we had the gold trade. And we kind of broke the rules this morning, but we had the gold trade. Where was it? Here it was. And I don't know if you call it break the rules or not. Opening range is opening range. So you can see this is an interesting analogy. Do you want to trade these kind of opening range setups with a big econ coming down the pike? So we had the producer prices, all that data we talked about. We actually had the opening range trade. You can see it. The market put in a bit of a base here, and then it actually tested the base and then broke out in earnest. So Chris and I both, I think, actually we both took the 1 minute opening range trade setup here. Almost got stopped out. Woo-hoo. And then on the PPI, the whole damn market launched higher. Now, ironically enough, you can see in hindsight that look at what the market did following that, just absolutely puked out. So this is probably a really good analogy of the opening range trade and a trader's life, where it's just a quick setup, bang, 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 take your money, get the hell out, goodbye. And actually, how many ticks did you take on the gold this morning? You took quite a few ticks, didn't you?
I think it was 12 originally. But
No, but when you got filled at, and
oh, I
actually
took
this is
out
it.
like 130 ticks. Yeah.
Yeah, boom, Merry Christmas. So this is a good example where, on these fundamental news events, and again, I'm a little bit skittish about doing the opening range trade in the face of a fundamental news event, but there's a good example where pow, and Chris had all his open orders all working like a good day trader. Congratulations, sir. I was very proud of watching you in action today. And he got filled all the way. I think right up into this wick up here, he was getting his fills. So nice job, sir. I a little bit amateur, I took the opening range trade breakout, and I didn't have my open orders working because this was my first day back on the job after being sick there and giving myself an excuse to take a few days off. And I kind of fat fingered the sell. I actually sold two. Like I bought two, sold two, didn't know if I got a fill. So I sold another two. And then I was like, oh shit, wait a minute. I got to buy those back. So actually, the good part about it is actually on this sell, I actually made a couple ticks on the fat finger trade. But anyway, that's a trader's life. So that was a pretty productive day, I will say. And then unfortunately, the stock market came around and the stock market took all those profits back. Boo, hisses, boo, jerks. Oops, what am I trying to show you here? Stock market, this was our opening range trade, and unfortunately it failed. And this is, I got to tell you, this is basically live by the sword, die by the sword. This is a trader's life. So you can see pre 5 minute, then we had the 1 minute. And if anything, I see this a lot. I'm still skeptical about trading this 6:30 retail open. I don't think this is a valid trade setup. And you can see how right on the retail open, they just wash both sides of the market, just like a washing machine, which I don't really like. So I'm still skeptical about this, but we are tracking the data. That's the whole point of vetting setups. So you got to take every single damn one of them. And then after the fact, I'd actually be curious to see how many trades we've logged so far, but it should be up to about, I don't know, probably about 40 or 50 so far. So we should get a pretty good idea of what works and what doesn't with this opening range trade. But you got to go through this process of taking every single one to just see what does work and what doesn't. So that's what we were doing this morning on the opening range. Then we jump into the day traders room once the market's sort of fully open. And I got to tell you, man, this has just been basically one directional right on the retail open. And I guess one of the clues that this was going to be trouble. Remember I had said how the SPY, they gapped it higher. Look at what they did with the tick. They actually, like the whole damn stock market, everything all jumped open. Everything was like plus 1,400. And I think the top here was about plus 1,600. So that means like literally about three stocks were up versus two or three versus like one stock down. I mean, just heavily tilted. And usually when that happens, that's actually a trap. And sure enough, you can see this is the net cumulative tick, or how many stocks are moving up versus how many stocks are moving down. And it's just one directional down the whole damn day. And you sometimes see this in the stock market. It happens. Probably another warning sign. And really, if we look at I'm a big fan of following volume and money flows. And I like to follow this, just the raw volume with the OBV, and what I like to study as volume impetus, and basically who's driving the bus. And you can clearly see the red bars, the bears, are much more active than the green bars, the bulls. and you can see the OBV indicator, beautiful M's, and there's just no bull here. So it's been basically a one directional market all morning. Haven't really even been hunting setups just because it's just been one directional the whole damn day. I mean, been watching, a lot of fun to talk about, but look at that, just one directional. I think I told you earlier, I had gotten sort of reasons from the algo to start liquidating long positions in things like crypto. So it's not really like I'm short. I'm just sort of sitting on the sidelines after selling what we did buy earlier on and just waiting for the dust to settle. Hate to say it, with this expansion of volatility like this, oh boy, this is a mess. And I think, as I showed you off of this higher time frame chart, wherever the hell it is. Well, here is the ES. This was, I think I had a fun little short setup coming out of the weekend that I was following. They pulled a total FU move, and then it turns out that that was actually the top. And this other chart that I have, actually, I think is a better image of this. All right. Is there anything in particular that I forgot to talk about here?
Not on my list. I think we've gotten it.
All right. What the hell did I do with that chart that I tweeted out? Anyway, I tweeted out a chart here. What are we supposed to think if we see the market smiling at us? Now that the smiles are in, I think, 2.618 is an absolutely incredible level to work with. I don't see why this can't be hit. 3 reasons for a trade, 2.618 Foggenbaum. This gap is yawning. It's wide open. We talked recently about 390 as the put open options, put options open interest, heaviest open interest contract. This is also what we call a MUOC. And technically speaking, I would actually expect market to trade back down to value. And then, final thought, if we just think about that January barometer, although I don't know where the hell I have that. I like the idea that actually we're probably going to have to go down now for a week or two in price just to try and clean all this stuff up. Oh, that is the January barometer. Yeah. So near-term objectives, I still like this 390 area. That was going to be my objective of this trade. Probably walk our way down this trend line into that level, and then also off of this trend line. And that probably, we're going to do the options expiry. There should be a lot of fireworks tomorrow. Friday should actually probably settle relatively quietly. So it'll be interesting to check out the next 2 daily briefs with regard to that. And I think on balance, that's about all I really have to say. So slow and steady wins the race. We've got an awesome presentation coming up in the after show here. So I think we'll leave the summary basically at that. Slow and steady wins the race. If anything, I'm feeling kind of better that I did hop off of those longs. Just simply followed the crypto signals on the site. I think this is an absolutely fantastic tool that we've built here. And it really helps keep you honest. I mean, the problem with, I don't even know how to describe it. The problem with like investing is that, of course, it has a lot of emotion built into it. And, when this indicator starts looking like this and you actually get 100 prints, you have to kind of let go of the emotion. You have to kind of just rely on, what, maybe it's not in my best interest to squeeze more out of this trade. Maybe it's in my best interest just to hop off, let the dust settle, show me new W's. I'll be more than happy to buy the position back. But right there, that's a bad place. It's almost a dangerous place to be long. And sure enough, what you saw today is a good analogy. We might even, we might even just go sideways here for a while. I mean, I just want the technical picture to clean itself up. I mean, my hunch is, there's 50% rules. That's what we're supposed to use as technical objectives just by default. I don't know whether we're going to work our way all the way down there. Probably, this is a scenario where, we probably, and, we have our show tonight. On Wednesdays, we have our crypto show. with Paul. And of course, Paul is short from up there, the bastard. Way to go, Paul. You're awesome. But I wouldn't be surprised if this is now something like we want to go into Colin's pump chaser zone kind of thinking, where we just let the market, we know that the market needs to come back to 38.2. So that's good old Ray Burchett. WD Gann, 50% rules. That's natural. That's normal. And if we can just get a nice structural bottom through this area, then I can start hunting my bot trend continuation setups, and we can get back in on the long side. My hunch is if this kind of scenario does play out, then we'll probably find that the crypto index calms down, all this stuff starts Wing out, and we start climbing the wall of worry again. But for now, just cooling our jets. And if anything, kind of happy I'm not even part of this, just watching from the sidelines. All right, everybody, I think we'll leave it at that. Totally excited about Zach's presentation. So I want to stop talking and I want to start listening. Have yourselves a great day. PMA for the win. Come and join the site. Of course, all you new students, get to work. So we got a new term coming up. And anybody who happens to be interested in options, of course, we have our level 3 options instructor here coming on today. So make darn sure to tune into the after party show at the very least sometime later on today or tomorrow to get Zach's take on the market. All right, everybody, have yourselves a great day. All the best. Thanks again. And the only thing left for everybody to say is bye for now. Snoop Doggy Dogg.